Welcome to InsurTalk. This video is about the condition of average found in insurances of property. The average condition applies to insurer situations where there is a sum insured inadequacy. If the sum insured under a policy is less than the amount it ought to have been insured for, then the property is said to be underinsured. In such situations, a proportionate deduction is made from the claim. For instance, if a property is worth rupees 100 and it is insured for rupees 80, then there is an underinsurance to the extent of 20%. So, if there is a claim of 50 rupees on the property, then the claim will have a deduction of 20%, or in other words, rupees 10. Now, the insurer would then pay rupees 40 only, and the insured would have to bear that rupees 10. So, the insured becomes his own insurer for 20% of the loss. This is the concept of underinsurance. So, logically, one can say there are two policies for the insured property. One policy issued by the insurer and the other one issued by the insured himself. So if the policy is fully insured for 100%, then the sum insured under the policy issued by the insured becomes zero, and it does not have to contribute to the loss. Otherwise, it has to contribute. So why is there such an average condition in insurance? Assume that there is no such condition. Then if a property worth value of rupees 100 is insured for rupees 80, all losses up to rupees 80 or the sum insured would be paid in full. Only in respect of total losses where the loss exceeds the sum insured, the insured would have to partake in the loss or the claim. So for all partial losses, the insured will be paid the claim in full because the maximum liability is limited to the sum insured. So total losses are usually rare, so the insurers can choose to not to insure fully. The insurers would then lose out on the premium that would have come to them had the insureds were insuring for the full value. At the same time, the insurers are responsible for all types of losses, whether it is partial loss or total loss. As and when such losses occur, they have to pay. So this means the insured would lose out on the spread of risk, which is underpinning the whole concept of insurance, and they will suffer premium inadequacy. So the condition of average is meant to act as a disincentive to customers or insureds from underinsuring their assets. So can the average condition be waived? So this can be done when insurance is done on an agreed value basis, such as insurances of works of art, jewelry, precious stones, etc., for which there is no defined value as such. So in such situations, the question of underinsurance does not come into play, since the insured and the insurer jointly agree on the value of the property at the time of taking insurance. But for all other insurances of property, where there is no such prior agreement on the value of the sum insured or the property which is being insured, the average condition shall come into play. Thank you.